So you're thinking about purchasing a property, but there's one thing standing in your way: saving up for the deposit. Gone are the days of no deposit loans. These days, as an absolute minimum, you'll need a deposit of 5%, although the recommended amount is 20%. Lenders want to see that you have genuine savings that you've built up over time. They need to see that you have good savings habits to meet your ongoing repayments. And it also gives the lender a buffer in case property values fall in future. Now, to show you how much you might need to save for your dream home, let's use the example of first homeowner James, who is looking to purchase a property worth $600,000. Now, like many first home buyers, James thinks that saving 20% will take him far too long, so he decides that he'll aim for his bank's minimum deposit requirement of 5%, which on a $600,000 property will be $30,000. Now, on top of his home deposit, James also needs to budget for the second biggest property buying expense, stamp duty. This is a tax charged by state and territory governments, and for James, who lives in New South Wales, this cost will be around $23,000. And that's not all. Since his deposit is under 20%, he'll also have to pay lender's mortgage insurance. Now, this is not an insurance designed to cover James. This is an insurance that covers the lender in case James can't make his repayments. And all lenders will ask you to pay for this if your deposit is less than 20%. Now for James, this is pretty pricey. It's almost $26,000. Thankfully, James's lender gives him the option to add it to his loan amount. Of course, this means he'll pay a little more in interest, but getting in the property door earlier is worth it to James. Now, once he's saved his 5% deposit and the cost of stamp duty, James will also need to make sure he has a few extra $1,000 for all those other expenses that creep into property purchasing, like conveyancing costs and maybe loan application and valuation fees. Which brings the total amount that James needs to save for his first home to at least $56,000. And that is before a visit to IKEA. So if, like James, you have property in your sights, the most important thing to remember is all good things come to those who wait. Or rather, to those who plan. Set your eyes on the prize by creating yourself a budget and a savings plan. And start yourself on your own path to home ownership.